Hey everyone, I had a request from a subscriber to answer which is the better dividend stock to buy, Deere or Hershey's. Now I'm going to do that in this video by comparing the two on their dividend yield, revenue, profit margins, cash flow, and finally valuation to answer which one I think is the better dividend stock to buy today. So let's jump right in, starting with the dividend yield. And the Hershey company offers a dividend yield of 2.04%. compared with Deere that's offering a dividend yield of 0.92%. So these are not high yield dividend stocks. What you're looking for in these companies is increases in the dividend payment over the next several years and also potential increases in the stock price. The next thing I wanted to look at is revenue, and you can notice that Deere is a much larger company in terms of revenue at 60 billion in the most recent trailing 12 months. And if you look back the last 10 years, Deere has demonstrated better revenue growth, growing from less than 40 billion all the way up above 60 billion in revenue. Now, Hershey has also demonstrated revenue growth, but not as prolific as Deere has. So you're looking at two companies that have grown revenue, although Deere with better revenue growth. That being said, forecasting and projecting over the next decade, you can expect similar rates of growth from these two companies, with Deere growing slightly faster than the Hershey company overall. The next metric I wanted to look at is the operating profit margin, and in the most recent year, Deere just surpassing Hershey company at an operating profit margin of 23.15% compared to 22.53% for the Hershey company. Although the Hershey company has done a better job over the last decade with their operating profit margin, Deere has just had a phenomenal last 3 years that I've been a little bit skeptical about its ability to sustain this type of excellent performance. You've heard me say about Deere in the last few videos that the last few years have been absolutely phenomenal for Deere in terms of the macroeconomic factors working in its favor, the company performing well. Everything has been just working so well that you have to kind of bring down your optimism for the company's ability to do this going forward for a longer time period. So with that said, I think over the next 10 years, I think the Hershey company will probably average a better operating profit margin than Deere, just like it had in the last decade, although there will be moments when Deere will perform better than the Hershey company. And that makes sense, right? Deere is more cyclical. The Hershey company is more counter-cyclical. Well, I wouldn't say counter-cyclical, but more non-cyclical in nature. People, are not going to increase purchases of chocolate when the economy is good, and they're also not going to decrease purchases very much when the economy is bad. It's more of a stable revenue grower instead of Deere, which is more cyclical. The next thing I wanted to look at is cash flow from operations. And again, this demonstrates a similar story with Deere having that cyclical up and down nature and doing really well in the last couple of years, jumping to 7.177 billion in cash flow from operations. But Hershey doing very well on it in its own right at cash flow from operations of 2.26 billion. And remember, even though Hershey has lower cash flow from operations than Deere, remember that Hershey has 1/6 the revenue of Deere. And so it's generating cash flow proportionally higher than Deere is. And it's also been growing its cash flow from operations as well. So I would give advantage to Hershey in terms of cash flow from operations. And finally, I wanted to compare these two on valuation, and I chose to use the forward price to earnings. And looking at this metric, Hershey is more expensive at a forward PE of 20.42 compared to Deere at a forward PE of 12.11. So if they were trading at the same valuation, I would have picked Hershey company, because of its more consistent profitability and cash flow and revenue sustainability. However, since Deere is selling at so much of a discount, I think that's too much of a discount for Deere, even though the concerns I mentioned earlier are meaningful to be sure. I like that significant discount at a forward PE of just 12 compared to 20 for the Hershey company. So if I was to pick today one of these two dividend stocks to buy, I would pick Deere. Deere.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.